You're welcome back. In this lesson, we're going to be talking about the last type of market on the basis of um, the structure. On the basis of structure, the third type of market, which is what the choppy market. You know, we've spoken about the trending market, what makes a trending market, how to spot a trending market. We've also, dealt with ranging market. What do you have to see when what do you see when you're looking at a ranging market? You're simply just looking at a market that is bouncing between support and resistance. Okay, simply just bouncing between that range. So you can also call that a what, a sideways market. But the third one that we're going to be speaking about in this lesson is choppy market. Okay, so let's quickly move on and define what heart is. A choppy market is a market condition that doesn't exhibit any type of predictable pattern. Okay, it doesn't, in a choppy market, you can't really say that this is the direction. A choppy market is more or less a directionless market. There is no direction. It is simply just gyrating around randomly without any clear direction up or down. Okay. Now, another way to identify a choppy market is actually in the volatility, the high volatility or the low volatility. Now, um, I'm going to be showing you very clearly exactly how to really spot that on a chart. So, for the one defining characteristic is a lack of clear long-term direction, up or down. Like you're saying, the market is not really trending. At one time, it's breaking support. At another time, it's breaking resistance. Everything is just done haphazardly. You can't say, this market is creating higher highs and higher highs or higher lows, or lower highs or lower lows in the case of, a downtrend market, or higher highs and higher lows in the case of an uptrend. It's not even moving, you know, within a defined resistance and support like you have in a ranging market. Everything is just done haphazardly. So how do we locate that on the chart? Look at this chart. This chart is actually taken from Euro GBP. That is actually a currency, a forex. That is actually euro against Great Britain pounds. And this particular chart is actually taken from 1 hour chart, 1 hour time frame. Okay. Now look at this. As you can see, I know, as you know, like I told you, that you have to start looking at the chart from the left side. That's where to start analyzing your chart from the left side. Don't forget that. All right. So let's look at this. Let's look at this chart right now, and you can see that there is support around here. Okay, price simply just moved on and found uh, a resistance at this particular point. Simply just moved down, and of course, somehow was actually got rejected over there, and of course the price simply just came all the way down. It was actually ranging. It was in sideways all across this particular place, and again shoot up to the downside, and again, I'm sorry, to the upside, got rejected again, and it was actually coming down, and everything was just haphazard. You can't really say that, okay, this thing is actually forming higher highs or higher lows. Look at this. It actually came uh, to this particular place to find a support. It moved and came back again. More like it broke the stuff. It broke that support to the downside, and again, it simply just like shoot up again, breaking the resistance over here. Huh. You know, broke that resistance over there, and again simply just everything was just haphazard. You can't really say, is this ranging, is this um Is this ranging? Is this trending? Certainly, you can see that this is not trending, and certainly this is not ranging. It is just, it is just choppy. Everything is what is just in mess. Everything is just a mess. Look at another choppy market. This one is actually from Australian dollar against Japanese yen. It's actually a currency to a currency pair in forex. It doesn't matter, like I told you, that it doesn't matter, whatever it is you choose to trade, whether you're trading crypto, whether you're trading currencies, whether you're trading metals and everything, you know, charts we always tell you exactly what's actually happening. So we're simply just taking the currency. That is Australian dollar against Japanese yen in this case. As you can see, just look at this market on the basis of what you've learned so far. Can you say this market is ranging? Can you say this market is trending? Certainly, this market is not trendy. It's just sorry for that. It's just what? It's just a mess. It's just a mess. As it is, it is just what? A mess. Okay. And in a market like this, what do you do when everything is just what? Everything is just a mess, when there is no clear direction, whether this is actually ranging or whether this is actually trending. What do you do? In this case, it is very simple. The best trading decision to make when market becomes choppy is to what? Stay away from the market. Stay away from the market until some normalcy returns to the market, until sense comes back to that particular market. You don't want to have anything to do, you know, with that particular market. It could be a currency pair, it could be a crypto, it could be a stock, it could be metals like gold, silver. But I mean, it could be oil, it could be commodity. When you see a choppy market like that, simply just stay away from that market and move on to the next one. Move on to something else that actually have a clear direction. Okay, you don't want to trade a choppy market. You don't want to trade a ranging market as it is. Okay, so that is that. All right. So we have come to the end of this model. I'm going to see you in the next one.